Welcome back, everybody. Glad you're here. We'll start out with my Robinhood app in live time. And as you can see, over the past week, I'm not doing very good. I've lost about $20, and there were only 4 trading days, so I'm losing about $5 a day, which is bad. All right, so let's see what happened. Ford is tanking me. I still think Ford is undervalued. I'm going to hold on to it. I'm probably not going to buy any more until I do more research into the company. I have to figure out why the stock price is going down. I know they have a lot of debt, but it doesn't seem uncommon. It doesn't seem too uncommon in the auto industry. So I'm not sure if Ford is just getting left in the dust by like GM and Tesla or what, but I'm going to do more research in Ford before I buy any more stocks. GameStop. I said last video I'm just going to hold this until the console wars start. I don't know what to do with GameStop. I'm just going to hold it until I make. It's only 6 shares. I'm not too worried about it. Apple's doing pretty good. Bank of America was a good buy. GE, I still think they're going to, if they break up, I think cutting off the dead weight is a good thing. I think the aviation, the healthcare, and the power industry are enough to keep GE profitable. So if they can get rid of all the bad stuff, keep the good stuff, I think going forward, maybe 1 or 2 years down the road, I think it'll make a comeback. It seems like it's too large of a company. It has such deep roots. I doubt it's going to be going bankrupt anytime soon. But I might have a little bit of bias on GE, so I'm not sure. Zingo's my free stock. eBay, I hate. I hate that I bought eBay. I hate watching eBay go up and down. Since I've gotten my new calculator that I'll show you guys in a minute, I've been doing a lot of work on it, and the more I fine tune it, the more I realize what mistakes that I've made so far in buying certain companies. My artificial intelligence ETF, I'm happy with that. It's still doing pretty good. I'm getting into bots. I think AI and robotics are the future. So I have another on Stash. I use Stash. I put $20 a week in there, and it's going to an ETF called Robo, and that's doing really well. And I bought AT&T. Before I buy more, I want to know why it's holding so much debt. I looked at Verizon, and they also hold debt, so I'm wondering if it's just something that industry does, but I don't like that it has so much debt. And then OHI I just bought today, and I'll show you why in a minute. So there's a lot of key ratios and figures for a stock, and it's hard to weigh them against each other. So what I wanted was just one calculation that would spit out a value, and then I could rank the stocks based on that value. And since I'm comparing the stocks to each other, it doesn't really matter how the equation is, as long as I know what's being calculated. So my thought process behind it was values and ratios that I want to be low, I'm going to put on the top. And values that I want to be high, I'm going to put on the bottom. And it's going to spit out a number. And then I rank my Excel sheet low to high so that the stock with the lowest value is on top of my list, and that's the one that I'm going to research first. So let me show you what the calculator looks like. It kind of looks like a shit sandwich right now, but I'll explain. I don't really want this channel to be an education channel because I'm too new to be offering any advice or teaching stocks in any way. I'm as green as you can get. But what I am going to show you is what I've learned and how I'm using these figures. So I'll link below to, if you check out Preston Pysh, he's got these 3 courses, and I highly recommend them. He's concise, clear. He uses great, easy to understand examples, and it's great for if you're on your way to work. I'll just put one of these lessons on, and highly recommend it. It makes some confusing concepts really easy to understand. So I'll just tell you what I'm doing with the values, and then you can watch those lessons and learn more about what each of these things do. So I'm taking the price per book value. The book value is pretty much the company's total equity divided by each share. So how much equity per share, pretty much. So the price per book value, I want that number to be low. So I want my stock price to be low, and I want my book value to be large, which would give me a smaller overall number. So I've got my price, I'm looking at price to book value, and I'll show you after this where I'm getting all this information. I want my PE ratio to be low. So the E in PE is earnings per share. So it's the price, which I want small, and I want my earnings per share to be large on the bottom. So I want that number to be low as well. So if you look at price per book value as risk, so how much are you paying versus how much is that stock worth? And you look at PE ratio as how much you have to spend to get $1 of earnings. So this is earnings potential, and this is your risk factor. You multiply them together, and according to one of those lessons, you wanted a number smaller than 22.5. So you also want this number to be small. So it's basically your risk versus your reward multiplied out as a single value. In my next column, I have the yield. Since this is my dividend sifter, I'm looking for a high yield, so I want this number to be high. I also included the 5-year average yield so that I could get a change in yield over time. So if the current yield is higher than the 5-year average, it could mean that the price or that the stock price is undervalued, and it could also mean that the company's moving in the right direction. So I want that number to be high. Then I've got my percent return column, and this is calculated simply by taking 1 and dividing it by the PE ratio. So think of it as, let's look at OHI. If I bought $100 of OHI, a year later, I should have $106 in value. So that's my percent return. And I want that number to be high, obviously. Then we're looking at debt to equity ratio. So we take the total amount of debt the company has up top, divided by the company's equity. I want that number to be small. And then the current ratio is the current assets divided by the company's current debt. So if it was just to liquidate today, how much assets versus debt, and I want that number to be high. So I crunch all this and I get a raw value, and this is how I'm crunching it. I'm taking the price per book value times the PE ratio, which I'm getting in J4. I'm multiplying that by the debt to equity ratio. So these two numbers I want to be small, so they're going on top of my equation, on top of my rate. On the bottom, I'm putting in my percent over average yield. So is the yield going up or down? So I want that number to be high, so it's going on the bottom. Multiplying that by the yield. I'm also multiplying it by the percent return. And the last thing I'm multiplying it by is the current ratio. So I want all those numbers to be high, so this basically just includes everything and gives me a really, really high value on the bottom. Then I'm multiplying it by 100 here just to be able to read the numbers easier. And what I do then is I just highlight everything, and I come up here to custom sort, and it lets you pick a column you want to sort by. So I sort by my raw value column, and then I go smallest to largest. And what it does is it floats the best stocks from this equation. I don't know if they're the best stocks, but from what I'm calculating, it floats the best stocks to the top. And now I'm focusing on these top 10, and I put them in my watch list on Robinhood. Now that I have them listed, I go through the balance sheets, and this is where I really start to dig down into the companies, and I'll give them a rating. 1 is good, 10 is bad, and then this calculates the raw value with my personal rating in there to give me another value, and I haven't finished yet. Then the rest of this is just what the earnings per share, book value per share, and then I'm kind of giving myself, I'm starting to calculate what I would pay for that company. Then I can go back and look at the price, and if the price is lower than what I would pay, then I'll invest in it. So one thing I ran into with the calculator, the difficulty I was facing between different types of companies. So I'm setting them up on their own tab. So I've got banks here because banks don't have current ratios. So that wasn't working in my calculator. Then I separated out ETFs and then my speculative stocks, which I haven't even started on this calculator yet, but I think I'm going to be using a PEG value, which I'll explain in another video. So that's my calculator so far. So that's OHI floated right to the top. I started looking at it and I just bought a share because that's all I could afford this week. Where am I finding these values? That's easy. I go to Yahoo, finance.yahoo.com. You just type in the ticker that you're looking for, and then I come down to statistics, and this is where I can get my forward PE. I can get my price to book value right here, and then I can also get my 5-year average dividend yield and my forward dividend yield percent. And then I use MSN money and I put in the ticker, and you come down to analysis and then scroll down a bit, and this is where I'm getting my debt to equity ratio and my current ratio. So between MSN money and Yahoo, it's fairly quick to get all that data and plug everything in into the calculator. So it'll probably evolve as time goes on. It'll hopefully get better, but for now it's the best tool that I got. Alright, so we're looking at my goals. 200 invested, so I'm on fiscal week 3. 200 a week would be 600, and I started with 5, so I should be at 11, and I'm actually at 12. So 200 invested, that's a yes. Sober, yes. I have not had a drink yet, which is shocking. I'm still surprised by that. It's been a long time since I've gone 3 weeks without drinking, so I'm pretty happy with that. Did I lose 6 pounds? Yes. Weight loss is going strong. I wish stocks were as easy as losing weight. So if you have trouble losing weight, just remember that before you get in the stock market. The stock market is even harder. So I was at 234 or 230.4. Now I'm down to 228.8, and my target for fiscal week was 234.8. So I'm smashing that target. Now hopefully I can just maintain. Yes. And subscribers, no. I'm learning that was probably a ridiculous goal to set. I guess I didn't really understand how YouTube worked. It's a grind. It seems like I'm gonna have to put out a lot of work before I even start seeing any sort of return on YouTube. All right, so what did I do to address that goal? I got onto Reddit, and I've got a noob investor vlog account on Reddit, and I've been hanging out in the Robinhood app subreddit. It's a pretty good subreddit. People are really positive. There's a lot of subreddits that are very toxic, but Robinhood seems to be an exception. So I'll hang out in there. I'll continue with my Twitter, and I'll continue making videos, because in the end, this is pretty much just for me to go back and look and see what I do wrong, what was I doing right, and what the hell was I thinking when I made these terrible, terrible decisions. So thank you very much for watching, and have a great weekend.